Um, yes, so Robert's here. Hi, Robert.
Hi, Lisa, how are you?
Good. Very good.
Great. Super. So I want to share my presentation.
So you go to share screen and you can share your presentation.
Okay, how about this? Can you see it?
Yes, you can see it.
Okay, great. Well, thanks everybody for joining. So I'm excited to talk about how DeFi is disrupting traditional finance. As you can guess from my tie, I come from traditional finance myself. And I'm a real believer in DeFi. I think it will completely change the way traditional finance works. So let me take you through a little presentation on how I think DeFi will disrupt CeFi. So the short answer in terms of what is it doing today to disrupt CeFi is not very much. Those of us in the sector, of course, are really enthusiastic about the rapid build out of DeFi, but in the traditional world, it isn't having a huge effect when you look at the numbers. So if you compare it in terms of trillions of dollars of global financial assets, you can see CeFi on the left, which makes up 99.9% of all assets, and the small growth of DeFi. But the growth has been fantastic. And I think what you see, which is even more important, is you see that it's really on the radar screen of a lot of people in CeFi. You see governments talking about it. You see exchanges developing. You see banks, very concerned about a superior technology. So my view is this is where we will be in 10 years. So if you look at it, I think that DeFi will take almost 20%, 1/5 of global financial assets. I think that will be mainly driven by huge numbers of debt and money markets that are tokenized. I think you will see the development of areas that don't exist at the moment, because what currently exists in DeFi, of course, is all the things that is the easiest to do, the lowest hanging fruit on chain. So it's things that are over collateralized. It's it's crypto to crypto. And I think what you will see in terms of an enormous development will be things like bank deposits. I think that a secured, insured bank deposit on chain will arrive. And I think that will completely disrupt the banking market. I think that you will see build out of things like debt products. I think that money markets will be one of the biggest gainers. And so our view is that DeFi will grow almost 250 times from what it is today. But even that, it will be quite small compared to CeFi. And who will lead this DeFi uprising? It's going to be a strange combination, I think. I think it's going to be a combination of savers, because essentially there has been zero yield in the world since the 2008 financial crisis. And these savers essentially are a range of people. There's individuals and institutions. It's as broad as family offices, small private banks here in Switzerland. It's asset managers in the major financial centers. And of course, it's individuals who are looking for yield. And then the other key driver of it, I think, will be people who feel that they've been left out by mainstream finance. So it's people who have a feeling of inequality, people who feel that they're not well served. Essentially, they don't get very much value from CeFi, from traditional finance. People who don't like their banks, which is, I've narrowed it down to 99% of people in the world. So the adoption curve, I think you can see on the right. You see the early days where it was essentially the Bitcoiners are, an unbelievable group who've created this structure to make DeFi possible. And it's almost like a bit of a religious movement, in the sense that It had its own language. It had its own feeling of group identity. And I think what you're going to see, which I think is great, by the way, but I think what you're going to see over time as it moves into institutional and retail savers is that the importance of the technology and the importance of the original fervent theology will be left behind a little bit, which I think is a good thing. I think it will develop into what are the benefits for me, because that's what people want to hear about when they adopt something. And when you don't, in the early days of the internet, you had all these questions about how packets were transferred online, whether people would use their credit card online. And now people don't even think of that. They just simply watch Netflix, or they buy and they shop on Amazon. They don't think of the underlying technology. And the same thing will evolve over the next decade for DeFi. Savers are going to ask themselves, so these two groups, savers and basically the pissed off 99%, are going to ask, the savers will ask, where did my yield go? And so yield has disappeared essentially in the developed world. Negative rates in Europe, the UK, Japan. Here in Switzerland, you pay 75 basis points a year to have your money in the bank, which is really irritating. And the 99% will say, where did my dreams go? Because if you actually overlay the growing size of the financial sector in most developed economies, it negatively correlates with the decline in middle-class incomes. So if you look at who is capturing a lot of value in developed markets, well, part of it is caused by a shift to globalization, but a large part is captured by the financial sector. And I think many people will argue what the financial sector gives to them and why they should be taking such a large piece of the economy. So looking at where DeFi will also be incredibly important is the broken central bank policy that exists in the world today. And you can see it by when there's it's a misunderstanding essentially of what money is and what banks are. Money is just a symbol. It's a representation of purchasing power. And banks are, active participants in the economy. They take a large part of the economy. They're not simply facilitating matching savings with productive uses. And you can see that by looking at historical crises. So if you look at the tech bust after the year 2000, 2001, you look at the great financial crisis from the year 2008, lots of monetary stimulus, which basically means printing of money, occurred with the idea that that would stimulate the economy. But if you look at it, bank loans did not increase. They decreased after that, because banks act like you and I do. If the future is uncertain and you've made a big bet on the future, which is what they do by making loans, you're much more conservative. You're much less likely to expand your balance sheet and increase productivity in the real economy. And the same thing I think will happen. So our forecast, you can see in the bottom right, is that based on the great financial crisis, that you will see a decline in bank lending. And you see that clearly today. First principles, part of the issue is that we really don't understand money very well. Outside of the crypto community, people don't stop and think about money very much. My own story was interesting. I was a young banker in Russia doing emerging markets, investment banking at the end of the 1990s. And we were making loans to some Russian companies. I worked for a multinational investment bank, and I was very young and working in the Moscow office just for a bit. And, we would make a loan to a company and I would be like, well, where does this money come from? Because in our subsidiary in Russia, we didn't have the money there. And, I remember asking lots of people, does it come from, do we send it from London? Does it get transferred through the Russian central bank? Does somebody show up in a plane with the money? Where does it come from? And, money comes from essentially making loans. So you make a loan to a company and then you create a deposit account and you create credit against it. So the problem with this fractional reserve banking industry is that it's diametrically opposed to the principles of DeFi, the principles of crypto, because essentially it's double spending, which, as you all know, probably in DeFi and in crypto isn't possible. And so by understanding money and banking better, and by essentially DeFi replacing CeFi in many of these things, I think you'll see a more equitable distribution of wealth, and I think you'll see a reduction in the variance of the economic cycles. So, and then CeFi is predicated essentially on inflation. Why? Because the largest borrowers in the world are CeFi and governments. So inflation is good for them because they have to pay back their money in future money that has less purchasing power. So it's worth less. So inflation is really good if you happen to be a bank or the government, or if you're part of the 1% very close to the centers of power. It's bad for savers. So if you're like the rest of us, if you're a typical middle-class person trying to save for the future, inflation eats away at your savings. And it's particularly bad for the poor because inflation, people who don't have access to, assets that might increase with inflation, like a house or a stock portfolio, it's incredibly bad for them. So our view of the future in terms of DeFi is that it will be very good for savers. It'll be very good for the poor. It'll be less good for government and banks. Because it just like a lot of technology adoption, DeFi is about abundance. The marginal production cost of financial instruments under DeFi is almost zero. It's just like publishing something online. It doesn't cost very much today. So those deflationary factors will be very important in driving the development of DeFi. So in summary, I think it's a 10x better technology. It's 10x better for society. I think that what you'll see is I think that will drive the adoption. I think adoption will be driven by essentially the value that it gives to people and our better human values. And I think there's some things we have to keep in mind in this kind of exuberant early days of DeFi is that the laws of reality, of finance, don't change if you just put something on chain. Finance is fundamentally about risk and return. So, a food token offering 1,000% APY probably isn't going to replace your average bank account. So, the thing that DeFi really needs for adoption, as I put in my adoption curve earlier, is it needs a better tie to the real economy. Once the ties to the real economy come, bridges to the real economy, bridges between CeFi and DeFi, I think that you will see adoption just explode. So here's how CeFi financing works. Essentially, you sell something, a good or service that somebody else wants to buy. And that comes into the company on the left-hand side, which is the operations. And then on the right-hand side is how essentially CeFi thinks about the claims on the value of the company. So that goes from at the top in debt to the bottom in shares. Investment bankers being, relatively ingenious have come up with a whole bunch of different categories for how a firm should be financed. But if you look on this next slide, here's how DeFi finances companies. You have the same idea, you sell something, you get in some cash from, essentially everything comes from the invoice, everything comes from the contract. But then after that, you can just have you can think of it in digital terms, not analog terms, not the arbitrary categories that were created essentially by, financial institutions. You can finance, as I've got here, from A to Z. It can be granular, divisible, borderless. You can finance from the first dollar or Bitcoin that comes into a company to the last one. And it just simply goes from the lowest risk to the highest risk. And that can be priced in a very different way, which I'll get to when we talk about tokenization. So here's my disruption checklist for DeFi. It has to have a benefit to a user. Here in Switzerland, for example, you are a regulated company and we offer insured deposit accounts on chain. We offer 3% in US dollars, which we're also developing in stable coins. And it's insured. It's completely insured through the Lloyd's market in London. So, the benefit to a user, whether you're a traditional guy or whether you're a crypto guy, is risk and return. So you get the same risk as a bank, but you get a much higher return. And it's insured. And it's only possible by using blockchain technology. So we need to focus much more, I think, on what are the really simple benefits to end users. And then there's human psychology, which we often leave out because we're so tech focused. But people, it's their money. So there's an instinctual concern about where you put your money. And we need to address the psychology of it, which is people need to feel that their money is safe and is looked after. And I think that even though, we may not all perfectly love it, I think that will lead to an increased need for regulation, whether it's self-regulation, something we start to do ourselves, or whether it's imposed by some government. Then it needs to be user-friendly. It needs to be tied to the real economy. It needs to be integrated with, traditional finance. There needs to be an easy bridge. And then, it needs to offer a very clear solution. Disruption is inevitable.
Robert, so I do have to pause you for here. Robert, sorry.
Yes?
Talking about disruption, I have to disrupt your presentation for a bit because we're running out of time. And is it okay if you can do 1 minute of quick run through and then answer one question?
Yes, for sure. I'm happy to do that.
So could you summarize in 1 minute and then, one question?
Sure. So I would say that tokenization is something that will inevitably lead to disruption of the centralized finance. And that is simply because it offers a better risk return possibility for investors, for users, and it's a much more efficient system. So I could put my slides available and people can look at them afterwards if they want.
Yeah, that would be great.
Good.
Yeah. So the question is, you seem to have a view that crypto and USD will decouple. Is that right? And when do you think that will happen?
Yes, I definitely think it will. I think that, and I think that all comes down to, if you think of crypto, you think of Bitcoin, for example. It just simply comes down to scarcity. I mean, there's 21 million Bitcoin. It's a fixed supply. It will have value as collateral to preserve your savings, to preserve your wealth, and the US dollar will continue to decline. The United States dollar has declined 96.3% since the Federal Reserve was established in 2013-14 to establish price stability. So that decline will just continue.
Okay. Thank you so much, Robert. Do you want to summarize anything? Otherwise, is there any last thing that you want to add?
Well, I would say that my predictions for the next decade are here. And essentially, I think that DeFi adoption will jump 30%. 20 to 30%, and I think that Bitcoin will also increase significantly. I think you should expect that CeFi will increasingly fear DeFi and will, be expected to fight back.
Absolutely agree. Well, thank you so much, Robert. We're very happy to have you here. I will upload the video on YouTube, and if you can send me the slides, and then I can just share with everyone after as well.
Sure, that'll be great. Thanks, Lisa.
Thank you so much. Bye-bye.
Thanks a lot. Bye-bye.